Amazing. Welcome back to another episode of Griffin Uncut. Today we are being led by me, David Jarvis, Griffin's co-founder and CEO, in conversation with Tim Chong, co-founder, and CEO of Yonder. Welcome, Tim.
Thanks so much, David, for having me.
As a introduction to the podcast, we try to focus on all of the messy, like implementation detail, the sort of hidden stories behind building and running fintechs, really at kind of any scale. And so today we'll focus a bit on kind of you and your journey, and then we'll spend a bit of time talking about Yonder and where it is and where you're going and all of that. But to maybe we'll start with an introduction from you. Who is Tim Chong?
So, Tim Chong, one of the co-founders and CEO of Yonder. Yonder is a next generation rewards card that offers both a credit and debit card for consumers where you can spend points and earn them and use them at really cool curated places across dining, travel, entertainment, shopping, all really hand-picked experiences that we think can give our members a chance to feel like a tourist in their own city, but also feel like a local whenever they travel as well. So if you're doing this for about just over 4.5 years now, and it's been a really fun journey so far.
And like me, you do not carry a British accent.
No,
So what brought you to the UK?
the amazing weather, of course. No, I came from Australia. I lived in a couple of countries before this. I lived in Cambodia, lived in Kenya, lived in the US a little bit as well. But basically, I had sort of a goal of building a consumer fintech, and the way I thought about it was, you know, go to the planet and say, where's the best fintechs in the world being built? And it was really San Francisco, New York, London, and maybe somewhere in like China, like Shenzhen. My Chinese is terrible, and so that sort of crossed off China off the sort of possible options. And then I think when I looked at London, I think this was one of the unique cities in the world where you had, huge, massive category-leading fintechs being built out of here, whether it's the likes of Wise, Revolut, Monzo, but also just a really great ecosystem of, you've got a regulator down the road, you've got a huge ecosystem of financial services and tech companies all being built in the same city. And it's pretty unique. I think there are very few cities in the world, maybe New York, probably more than any other few cities in the world. And I've always wanted to build an international business. And so the idea is that if I think I was like ended up in the US, I think I would generally end up building a more US centric business. Whereas I think where London's pretty uniquely placed is that you can sort of build an international business from day dot.
Yeah. Is this your first company?
First company I founded, I was sort of involved in a really not so great startup, sort of a co-founder about 13 years ago. I made a lot of mistakes. It was basically building this graduate recruiting app. We didn't go anywhere. I think I learned a lot about two-sided marketplaces though. I think the mistake we made was trying to find companies that would agree to be on the platform and going to large, accounting firms like PwC or, Deloitte and say, do you want to be on this graduate app where there's no customers was pointless. We should have just listed all the
Yeah.
companies, spent
Yeah.
most of our time trying to get students to go on the app. And then once we had enough scale, then go to the companies and say, hey, we've got, I don't know, 500,000 students using this app to go and look for grad jobs. Do you want to be like paid to list on this app rather than trying to sell to companies when we had no real product for them? So that's a good
Yeah.
lesson in like two-sided marketplaces, to be fair.
Yeah, I often quip like, Griffin is one of the hardest businesses we could possibly have chosen, and then I kind of like pause and I go, but at least it's not a two-sided marketplace.
Yes. Yes.
Um, incredibly hard. And then, so you mentioned kind of like already starting from a place of wanting to build a consumer fintech. Like, where did that urge come from?
I actually had a bunch of ideas. Funny enough, one of my first startup ideas, which I should have started in 2012 or 2011, I was a consultant. I was like a completely newly minted management consultant. And I remember my biggest annoyance was time and expense reports. You'd have to, specifically expense claims. So you'd pay for it on your corporate card, but then you'd have to get the receipt, put it in an envelope, then have to go into SAP, manually load in the expense entry, and then make sure for that week you then date the envelope for the weeks of expenses and then send it off into this yellow envelope and you drop it off in a mailbox. And then came from China would then do the audit of your expenses. And I remember being like, man, what if I could just build an app that you could take a photo of your receipt linked to a card that would automatically manage your expenses for you? And I didn't do anything about it, to be honest. And I actually regret that ever since because
Oh
obviously,
yeah, it turns out that's very valuable, and people will pay good money for that.
yeah, exactly. And then, Brex turns up, Pleo, Payhawk. And I'm like, bloody hell, I had this idea in 2011, 2012. I should have just done it.
Yeah,
And this kind of kept happening. I kept having ideas. I had another idea. This was less of a business, but a cool, interesting problem, which was basically one of the things I always find really bizarre is that if you want to send money to someone, you basically have to guess the sort code account number combination is correct. It's like you just have to hope that you didn't typo it as you were sending the
yeah. So you
money.
so you invented confirmation of payee.
Yeah, exactly. And I was like, why? What if you could create a platform that would like check the name, sort code, and account
Yeah,
number matches?
yeah,
And so it kind of kept happening. And I was like, man, like maybe my intuition's actually pretty good.
mm,
Before this, I was at another scale up called ClearScore. I was head of products there, and I loved it there actually. And it was probably a good taste of sort of existing. I was part of the international expansion team, so it was sort of existing product, new market. So you're still trying to find product market fit, but in a
yeah,
quite different way in that you already have a product that you're trying to find. I describe it as like new product market fit.
yeah,
But I love that actually, and I think you got to the point where I'm like, I could kind of keep doing this. I could just go and do it myself. And so eventually it was rather than let's say call it um you know, rather than LARPing founder, which is, getting the experience of being a founder sort of by doing international expansion, just go all in basically. And so I think there was a combination of, I think I was pretty good at executing things and I had a pretty good track record of like execution. And I think my intuition and ideas weren't terrible. I think I consistently looked
yeah,
at, I kind of kept a notepad of different ideas I had. And I sort of had a good sense that like my consumer product intuition was actually pretty good.
yeah,
And so I eventually get to a point where I could keep talking about it and keep writing ideas down. I could just go and do it myself.
yeah. I think I think often about like what it is that makes for like a good founder CEO. I'm not sure like I have like I'm not sure any of my thoughts are good, by the way, but like the two kind of most important ones are like you have to have good taste, like because
Mm,
if you don't have good taste, you'll be ruined ultimately. And then you have to be able to tell a good story. And
mm.
like if you have those two things, like you can go pretty fucking far. Um, Speaking of which, how did you meet your co-founders and convince them to work with you, or did they convince you to work with them? Like how did the matchmaking happen?
So my CTO, we actually worked together for 3.5 years, about 3 years at ClearScore together. So that was a bit more of a, let's call it, we were sitting at an Airbnb in Australia. We were launching ClearScore in Australia and we were just drinking beer. And we kind of just, it was a passing comment. I'm like, hey man, it'd be kind of nice to build a company with you one day. I was like, yeah, that'd be fun.
Yeah, yeah.
It was a very
Let's just get
passing.
married and have kids together. Why not?
Yeah. It was a very passing comment. We'd worked together for so many years. He was running engineering, I was running product, and we just worked really well together. I think we
Yeah,
had mutual respect, just got each other. Um, yeah, it was just great. And then our third co-founder, Thiso, he was actually from Australia as well, and we'd spent some time we'd kind of have lunch together. He was looking after data science at ClearScore, and we'd often sort of sit in the kitchen together and just chat about what was like moving to London, how much Australia needs like great fintechs and why it's sort of so challenging there. And we kind of always just joked about like, oh, one day if we move back to Australia, we could start a company together as well. So a lot of these issues started as like very much like passing comments of like, oh, it'd be fun to work with them. I would say like I almost started with people that I wanted to work with to an extent. And so then when we talked about, hey, I've got this idea, what do you guys think? It was very much like, well, we kind of already talked about doing something together anyway. A lot of it was more like, does the timing work out in terms of just where our lives are? I think the reality is it's a huge personal sacrifice and a lot
yeah,
of personal risk as well. And so I think it was very much like, on a personal level, are you ready to take the leap? But that was more the challenge. It was less of a question of like, are you the right co-founders? That was very much like, these are definitely the right people
yeah,
we need for this company.
yeah, 100%. With Alan, my co-founder, when I first reached out to him, he was still working on another startup idea that he had, and I didn't think that it was as much of a goer, but I had to like be like respectful and patient and let him come to that conclusion himself.
Yes,
Um,
that's tricky.
cool. Cool. So then, let's talk about kind of like where things are today, right? So like, how big is Yonder in terms of like, I mean, and obviously feel free to disclose or not disclose as much as is kind of appropriate, but like, how big is the team? Like, where are people based? How many customers do you have? Like, what does Yonder look like right now?
Yeah, so we're a team of about 60 people now, mainly based in London. We are looking at opening up a support center in Wales. We've got a couple of engineers in Europe as well, but primarily based in London. In terms of sort of the way I best describe us is less about funding rounds and everything like that, but like where are we really? We're like post PMF early scale. So really trying to prove we can get distribution at scale. So, our question is, 10 million in revenue, that's fine. It's like, how do we get to 100? That's really the question we're trying to answer now, 10 to 100 million. How do we like prove we can rapidly get from a 10 million plus run rate business to a 100 million run rate business? And so, we're growing a customer base 10% month on month, which is great. And we're still going, okay, how do we make sure we can continue to maintain that? How do we make sure we can convert, new customers to monetization, to revenue? So we're very much in that, like, let's call it the next inflection point of growth where we're trying to figure out how do you get that like exponential level of distribution, and also looking at going from a product that had really good product market fit with a subset of customers in like London who are like young professionals who travel and eat out all the time, to making sure we can find product market fit with customers all across the UK and then all across Europe. So really the sort of like described as like TAM expansion now, and going from how do we make sure we can prove that we've got not just product market fit with a narrow set of customers, but now expanding that to, tens of millions of customers across the world. How do we get there? So that's sort of the big focus for us at the moment.
And this is a bit of a detour, but like, how much of that are you finding to be about kind of go to market and like positioning, and how much of that is like changing the product itself?
Yeah, a bit of both. I mean, one decision we made recently was to launch a debit card. And the reason why we did that was because I think two conclusions we had. One, about if you could have asked customers what was the primary reason you signed up for Yonder, 60% were related to rewards and about 50% related to travel. So you get like 75%. And then about the last 25% were related to like, actually, the last 25% was like app and then credit and then credit building. So actually, probably only like 20% sign up primarily for credit. And yeah, on the other hand, credit makes our distribution very difficult. Credit, as a regulated credit business, we have a lot of rules around how we market. We have a lot of rules around who we onboard. You have to manage credit risk. You have to manage affordability. And so your flywheel is really difficult because, you know, the amount of money you spend on getting a customer is so high because the way you market, you have to be careful. You have to decline a lot of customers. So not only do you have to do AML, PEP, KYC, you do all those things. Plus you then add on credit check and affordability assessment. And also in your credit check, you have to be pretty conservative because, hey, it's probabilistic. You might have a 90% chance of paying us back, but by the way, you have a 10% chance of not paying us back. That's not good for us. We need you to be like 95% sure you're going to pay us back. But by the way, 95% is like quite a high level of certainty, or like 98% certainty. It's actually a very high level of certainty, which means that if you're anywhere in the gray area, we say no to you. And so you've got this funnel where it's hard to market, it's hard to approve people, and you also have to prove affordability as well. And so, you're declining like upwards of like 80 to 90% of customers, which makes it very difficult to like accelerate your growth. Well, instead of it, we're growing 3 to 4x faster than when we just had a credit. So it really immediately that's already showing us the ability to open up top of funnel and to drive more word of mouth and organic growth by making the product just much easier to sign up for and try out as well. So that's been one aspect. And then I guess the second aspect then is that's really have to change how we think about positioning. We are known in the market predominantly as like an Amex, sort of Amex killer. But people associate that also with credit. So it's like, okay, we're an Amex without necessarily being a credit. Okay, so how does that fit in someone's mind? The idea
Yeah,
of getting like Amex quality rewards with a debit card doesn't exist in the UK. People are
yeah,
trying
yeah.
to struggling to get their head around that. And so these are areas that we're still exploring. How do we land that messaging? And I think for us, we've always wanted to build an aspirational consumer fintech brand as well. And so, if you think about Revolut, Wise, Monzo, I would say like they're predominantly positioned more as like a digital bank, or like a fast, like I describe it as like a faster, cheaper, better user experience financial product. We've always wanted to position ourselves as much more like an aspirational product. Like,
Yeah.
you have a Patagonia jacket. quite frankly, not because you're going hiking because you're in central London, it's because you want to be seen as somebody who's like adventurous and wants to try new things,
Mhm.
right? And so for us, that's really been a big part of our consumer positioning as well.
I love talking to consumer founders because like my brain doesn't work like yours. Like my brain is like, you will tell me what you want and you will pay me money for the thing for me to give you the thing that you want. And you're like, no, I want to acquire customers who want to be seen wearing the Patagonia jacket, but who don't want to go outside.
Yeah, yeah, yeah.
like like
And,
I'm
uh,
just it's
and in
completely
a weird
different.
way, you kind of have to know when to listen to your customers and when not to. And it's a
Yeah,
very
no,
weird thing to
100%.
do.
Yeah, yeah. How would you describe the culture at Yonder?
I would say intense, but hopefully really caring. That's what I describe it. I think we always made a joke a while back that we wanted to create a culture that was always like, as intense as a Revolut or Uber, but as kind as a culture like Dropbox or Airbnb. And I think the way I always described it is that we had this deep-seated belief that people can do anything. We have a really high bar of performance that we expect people to hit. We never drop the bar, but we will probably give people more grace to hit the bar than a company like Revolut, who will probably more quickly like let them go. We might give them a bit longer than other companies, but we will like essentially like to the, to what Jensen kind of said, talk to people into excellence. Like we will really like push you and really try and help you get to that bar. Now you can't always get there, but not everyone gets there. But I kind of deep seated belief is like if you're not hitting the bar, we first need to tell you where the bar is, and the bar never drops.
Yeah,
But we'll do whatever it takes to help you hit that bar. We'll support you and we will care for you to hit that. And if we decide that it's not right for you, or you decide it's not right for you as the other person, then we'll go try and find you another job. So like, I think our general rule is like we want to make sure we take care of people as individuals, as human beings. And the other side, I always want to be really clear that careers at Yonder are not lifelong careers. They should be for 12 months, 2 years, 3 years, 4 years, 6 years, whatever that long duration is. But we want to make sure that in that period of time, you've learnt a lot, you've stretched yourself, you've become the best person you could possibly be. But it may not be for you for all stages of life. Like, if you want to
yeah,
have work-life balance, like we're not a great place. There are many great places out there that has great
yeah,
work-life balance. There's some great, big high street banks. Go work for them. If you want to, leave at 5 o'clock and never work a weekend, great place to go. Not our company. And so I think we want to be really clear that it's a challenging place. And we wanted to kind of feel almost like the feeling you get when you finish a marathon, where it's hard and you're like, damn, that was brutal. And yet you're like, but I'm so proud of myself. And you can't do it forever. And you can't do it sustainably all the time. And yet for some people, they're like, I love it. I love the intensity. I love the challenge. So we want it to be a place like that for people. I don't think we always get it right. Sometimes we skew too far one way, skew far the other way. But
yeah.
very broadly, we want it to be a place where we always want everyone to become like champion marathon runners. And we want to help you. And we believe that anyone can become a marathon runner. And yet at the same time, if you aren't willing to put in the training, you aren't willing to eat well, you aren't willing to do those things, then we'll help you find another job somewhere else.
Yeah, I find that super interesting. I mean, I think I came from Airbnb, right? And so that I mean, Airbnb is a great product business, but it's not like as you say, like a Revolut or an Uber that are kind of like almost ruthless, right, in their kind of performance expectations. Um, and there's a lot that I like about Airbnb, and I'm fascinated by this kind of pendulum that you see these companies swinging back and forth on, right? So like Uber obviously was at one end, and it's since bringing in Dara, who's now been there a long time. Like the pendulum still, it probably skews far more that direction than it does to the kindness direction, but it's definitely swung back quite a bit. Whereas I think, when we were early, we indexed much more heavily on kind of kindness and empathy and thoughtfulness and getting stuff right. And there were two effects of this, one of which was we did tolerate underperformance, and we also didn't move fast enough. And like over the last 18 months in particular, we've started to like really like re-index the company towards like a much more kind of robust expectation that like, no, this is not a party. Like this is not a party. This is not a social club. Like this business will fucking die if you do not put some fucking long hours in, and you also got to deliver really good work. And if you can't do those things, I'm sorry. Like we care about you at a human level, but like we don't have any foundational loyalty. The company's existence comes first because we're still an early stage growing business, and like if we don't do the hard impossible thing, we will die.
Yeah, I totally agree.
Uh,
I think my observation was we got it wrong when we flipped on setting an expectation for new joiners.
hmm,
I think the way it's got, we did it right at the start, let it slip a little bit, and we're coming back up again to where we started. I
hmm,
remember back when we first started, it was pretty ruthless. It was like, we're in the office 5 days a week. This is during COVID, by the way. And we
yeah,
were
yeah,
like, by the way, we have weekly commitments. And if on Friday you don't get it done, you get it done over the weekend.
yeah,
Like, and that was the expectation. I would say the one thing that has changed though is that our business has definitely got a lot more complicated. This is
yeah,
pre-launch. You could
yeah.
just set a deadline and say hit it, but you won't have any incidents come up. You don't have any customer issues. You don't have any other sort of random problem. Everything's a lot more predictable. But we've definitely tried to push back to go back to you do what you say you're going to do and not let that slip again. I think it hasn't
I
always
think
been
that God, that's
perfect.
so interesting because we had like almost the opposite journey, which was when we were building in the early days. The problem was that we would constantly find stuff that we hadn't like anticipated or expected, and so the sudden unknown complexity was always blowing up in our face, and so like every deadline we tried to set, we would miss. Whereas
Mm,
now, because we have so much more data, we're like, okay, cool. We know how to run like a super high velocity process. We have much more visibility into like how long things are going to take, what they're going to be, what's going to be involved in doing them. And so now, like we've like extremely consistently hit our own schedule and target, which is like, I mean, just by itself it feels like wild. But it's fascinating to see that like in reverse at someone else's company. It
yeah, I
makes
think
sense. Like your narrative makes sense, but like I'm living in this world where like it's like a completely different set of facts and a completely different narrative, but businesses that are
yeah,
structurally not so dissimilar, really.
yeah. I think what we find we never missed macro deadlines. So debit card, we launched the day we said we're going to launch it. Like
Yeah,
literally, that we were only about 6 hours late. We planned to launch in the morning. We launched it at 3 p.m. Like that was, we really pushed those. So I think the macro ones we will never miss. I think it's probably more on a weekly micro ones
yeah,
where, hey, you've got this on this week, but by the way, if you're working on an incident for 2 days, it's not like realistic to go, hey, you've been working till 4 a.m. every night. Can you go and finish this piece of work, this feature that you
yeah,
said you're going
yeah,
to do on the
yeah,
Monday? So I think
yeah,
it's probably that more so. I think the other thing as well is we were very much like keep a tiny engineering team. I would say that our product surface area has gotten so big now, it's probably been a liability not growing it now. So,
mm,
we've only about 11 engineers, mobile and backend, running
yeah,
core banking, cards, payments, a credit debit
yeah,
card, our own
yeah,
in-house rewards platform as well.
yeah,
And I think that our product surface area is too big now to have a team that size. So that's my
yeah,
reason why we're growing the team.
yeah. Um, let's talk a bit about the journey. Um, how did you find the first 100 customers?
Very quickly, we just WhatsApp groups. I mean, we just literally said, everyone, we're 10 employees, go and find 20 people on WhatsApp and get them to sign up. First one was actually quite easy. It's actually the next 1,000 that was hard. The first
Okay,
100
so talk
is
to me about that. Like, how did you go from friends and family to knowing that you had something that was working, basically?
yeah, I think that the next ones are harder because you're neither here nor there. With the friends and family, it's finding that people inherently trust you because they know you.
Yeah,
You're then saying, hey, basically like don't use your Amex, which has been around for 70 years and has, well, I mean, even longer than that, say. But don't use your Amex, which has got this huge, incredible brand, and use this like unknown startup instead. That's a
yeah,
hard, and we had a fee, by the way. We were one of the
yeah,
few crazy consumer things that had a fee-based product from day zero. We only had one
yeah,
product, £15 a month, and it was a credit check, by the way. So it was like
yeah,
a credit check and a fee. And by the way, like you don't really know who we are, and we could be like, we don't even know a scam site, basically. Like it's actually a lot harder. I think it was almost like that first part was the hardest, almost because we had no trust. You Google us and you can't find anything.
yeah,
So you're like, you want me to trust you. When I Google you, I find nothing. You've got maybe
yeah.
20 reviews on Trustpilot, and this company may not be legitimate.
Yeah.
That was even a hard one. We did a lot.
And
Look,
how did you get through that?
like a lot of word of mouth helped us at the start. A lot of the early word of mouth. We did a lot of community stuff. We did a lot of unscalable things. We hosted a lot of events. We did like
Yeah,
founding member events. It was very like unscalable. We were really good at capturing like the tech early community, like
yeah,
that community of people who want to try new tech products. I
yeah,
think what helped a little bit was that almost the people that signed up were like, I don't mind signing up for this like highly risky, early stage company because I like the.
Yeah.
It was quite novel as
Early
well.
adopter consumer. Yeah.
Yeah, I think the highlight was actually graduating there from that to the
Yeah.
mass consumer because I think
Yeah.
that's when you had to build a lot more time building trust markers,
Yeah.
whether that's content, PR. So when you Google us, the question we always said is, what do people find when they Google us? And there has to be enough where they go, oh wow, okay, this is a great company. This is like a legit company and this is a
Yeah.
legit product that I really, really trust. That was probably one of the hardest things to build up, and it took time, but I think that made a big difference for us as well.
When did you
And
get the .com, by the way? Did you? I'm assuming you didn't have that right away.
no, no, we didn't. We had yonder.co.uk and then yondercard.com.
Yeah.
The .com was a random one. It's very hard to get, by the way, because it's a
Oh, I
real
know. We
English
had to
word.
go through like a whole fucking thing to get Griffin dot
Yeah,
com.
it was harder as well because it's hard to get real English words. It's easier if your
Yes.
company name is
Yeah.
fake, but our
Yes.
name is a real English word. Like you look up the dictionary and yonder is a word.
Yeah.
So I'd found a company that had it, but I kind of knew that if I approached them, there's just no way I'd be willing to pay that much because they look at and
Yeah.
say, "Hey, you've raised this much money," and it would get the
Yeah.
price an arm and a leg.
Yeah. Yeah.
So it was by dumb luck. I think I'd emailed the owner at some point anyway. Never heard back, and then I got emailed on LinkedIn from some Californian, essentially bankruptcy lawyer who said, "Hey, I have some of the assets. Are you interested?"
Oh, that's so interesting.
Yeah,
Oh,
and I
that's
thought.
awesome. Oh my God, that's fantastic. Oh, I'm so envious. I had to pay an arm and a leg for this.
I thought it was a scam, honestly. I genuinely thought it was a scam. And then they
Oh, that's
said, hey,
amazing.
if you're interested, here's the court proceedings. You
Yeah.
need to go and like put a deposit down as well. And so I was like, oh gosh, this is like 100%
You're like, this is
scam.
definitely a scam. Yeah.
Yeah, yeah. And literally I went on, I think my EA helped me as well, but we went to like the Californian, like official website,
Yeah,
like we went to the
the
court
court
website
filings.
and
Yeah,
found
look
the
it
court
up.
filing. They were like, look, that looks
Yeah.
legit. I looked at the
Yeah.
law firm. That looks legit.
Yeah, you're like,
Everything was
these are the
legit.
people who are the appointed like administrators. Yeah.
Yeah, so we're like, okay. Anyway, we turned up. I was in Croatia. I was in swimmers. I had board shorts underneath and a t-shirt on. And I turned up to this virtual courtroom, and it's a US court. Obviously, I have no experience in the court. And our head of legal, she has no US court experience. She's a UK trained lawyer. I said to her,
Yeah.
like, what advice would you give me? She's like, I don't know. I'm not US trained, but maybe as a rule of thumb, don't speak until you're spoken to. Like, okay,
Yeah.
great. And
Yep.
so I'm on the call. I've cameras off because there's just a judge speaking. And then they say, so can we just do a roll call on who's present? Problem is, everyone who's present is called Yonder. Because all the people who want to bid on the
Oh
assets.
my God.
And so they're going through like the Yonder, and I'm still
Yeah, yeah.
silent. And at one point, one of the bankruptcy lawyers has said, Tim, are you here? Yonder Technology. And I was like, oh, there was like three Yonder Technologies. Like, oh, yes, 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 we're here. Put my camera on.
Yeah. I'm the other technologies limited parens in the UK. Like,
Exactly. And so we were bidding on, anyway, so the bid is the start. We had a reserve price. I kind of went in pretty hard. I was like, my general
yeah,
rule was like going confidently, bid, 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 bid. And
yeah,
anyway, they just outbid us, and I was like, I really want this domain, and I feel like if I lose it now, I'm not going to get it again. And so
yeah.
I told I was slacking my head of legal, I said, hey, do you think we should go up? She's like, Tim, we hadn't discussed this before, so like, I don't know, like, this is a commercial decision, so like, you do what you want to do. And I'm
Yeah,
like,
yeah, yeah. No, this is not a legal decision.
yeah, yeah, yeah. So that's fine. Let's go and bid one more. So I went in another hot bid, and literally I was waiting for silent, and then the other bidder pulled out, and then we got the domain and a bunch of trademarks. So yeah, it was really challenging. I mean, the practicality of getting the domain is quite hard though. So you
Yeah.
got a piece of paper saying you have the right to get the domain.
Oh yeah. Now
It
you've
just
got
says
the
get the
legal
domain.
right. Now you have to like actually get that. Yeah, yeah.
Well, yeah, like then they had to go find out who was the
And there's
domain,
no
and
like
we said,
IT guy necessarily. Like it's not like there's a running IT department on the other side anymore who can transfer it to you.
no, no, no,
Yeah.
and then they didn't know the username and password. Like,
Yeah. Oh my God. Of course.
so then I
Yeah.
had to go contact the domain administrator.
Yeah.
They didn't respond. I had to go contact over LinkedIn. They wanted to check if this was a scam. So there was like a whole process of. I mean, it took us 6 months of just back and forthing to get the domain. It was a nightmare, but it was worth it. I still like
That's
have no regrets.
that's absolutely wild. Can you share what it cost in the end?
It was less than 100,000, but it was
That's
more than
very. I think that
10,000.
for like a six letter .com, that's very good.
Yeah,
Um,
it was worth it.
we
It was definitely worth it.
we paid more than that. We had to spend a couple of years because it was there was like a Griffin technology business that had been subsumed by a larger telco. And so
Mm.
they were no longer using the domain, but they still had it registered. And specifically, they had it used, this is very annoying, for like a bunch of like intranet websites. And so that
Mm.
like they were very reluctant to like give it away, even though it wouldn't have affected their like intranet use, but it might have potentially like introduced kind of confusion. And we spent basically 2 years trying to like get them to take us seriously, and then finally we found our way to. I mean, we use a broker, but like our broker managed to crack the hardened external corporate shell and get someone in there to take us seriously.
It's also very hard. I mean,
Um,
who's the decider on domains, right? A big corporate, like the
yeah,
CEO is like, I don't care. This is not my thing for
no,
2019.
exactly. And so you kind of you have to go in with a big enough number that like the IT guy is like, okay, I probably need to tell my boss. These guys are offering six figures like upfront, like for
Yeah,
this domain. Like
yeah,
I'm gonna have to tell like management about this.
yeah, yeah, yeah,
And then
yeah,
eventually management is like, yeah, that's a large enough figure that we should just do this because we're
yeah,
not using it.
yeah.
Um, okay, cool. What do you, so do you have like a memory? You probably have several, but like what memory of the first like 2 or 3 years of the business stands out the most to you as like, I don't know, emblematic of the hustle, the grit, you know, um, the soul of Yonder in the early days?
One of the first things I was relentless on is this idea that we just don't miss deadlines. Which I know sounds so
Mm,
trivial, but just this level of like, we said we're going to do it, we're going to get it done. And I
yeah,
remember we said in the first 4 weeks, I was like, we knew that the FCA authorization was going to be the long pole. We knew it'll
yeah,
take us,
sure. Yeah,
upwards of 12 months, possibly longer. And we cannot do anything to find product market fit until we have the license. I mean, we could do
yeah,
like testing, but even then,
yeah.
like you can't really do landing page testing. The regulators don't love you advertising a product you don't have a license for.
Yeah, I mean,
And,
shameless plug for a lot of fintechs. Like this is what Griffin actually does enable you to do. But for what you were doing, a credit card, we could not have helped you at the
yeah,
time or
yeah.
today.
And actually, there are very few providers that offer you a consumer credit license as an agent
Yeah,
for
yeah,
good
yeah,
reason, because it's like
100%.
very high risk, very
Yeah,
highly regulated activity with a lot of potential for customer harm. And so we knew we had to apply for the license. And so we were like, we need to get this done as fast as possible. But it's hefty. I mean, you've gone for a POA license. Obviously, POA is much more difficult in terms of getting a banking license. Um, but we were like, we want to get it done as fast as possible. Let's give ourselves 4 weeks to just grind it out, basically.
yeah,
And
yeah,
so, we did it. We did it. We then, it was about 1,000 pages of paperwork. And the day we wanted to submit it, we were like, let's go and do a quick review of everything. And so we printed out every single document. We had 3 stacks and we peer reviewed everything 3 times. And obviously, as we did the peer review, things came up. We found an issue.
yeah,
We printed it again. Anyway, it was up to about 4, 3 a.m. in the morning and it's still there. And we're
yeah,
like, we've got to, like, we're good to go. Let's submit this. And, we were there with like a lot of Red Bull, and a lot of cans of beer, just like finalizing everything. And then like we submitted it. And I remember literally was so tired at one point. CSA almost hit the wrong button. It almost hit cancel application instead of submit application.
mhm,
And Harry got back so late that his wife was like, I've had enough of you coming back late. I'm going to buy a dog. Um, they have a dog. They have a, I think it's Beddington Terrier or something, but they have a dog now. And I still remember though, we got our license, I think just before Christmas that year. So it was under about 10 months actually, which is really fast.
that is
And
quite good.
it was probably one of the best Christmas presents we could get, to be honest. I think, Steve was sadly by himself because I'd gone back to Australia to see family. And he's like, I am in the office by myself. I will drink whiskey by myself then, just to celebrate. But that was a huge moment for us. It meant that we could launch. And then another big moment was when we got our first card transaction working. That was
Yep,
incredible.
yeah,
I remember actually, I first got the digital card working, but the app was so bad. Every time you open the app, it'd log you out. Like, we didn't save login tokens. And so you had to like, for me to make a purchase, I would have to log in, get the card details, copy, then do it. We had a digital card. We didn't have a physical card and no Apple Pay, Google
yeah,
Pay. And
yeah,
all I was using it for was in Disney World with my wife. And I was like, Disneyland or whatever. And I would literally like, every time I buy something, I would like log in, copy, paste card, make the transaction, get logged out, try it again, keep doing it. But it was incredible to like have a working
yeah.
card that like we made from scratch. That's such a cool feeling.
Yeah, I remember when we started like seeing the first because like for like we're like two tiers, right? So we've got the like banking capabilities for the companies that we work with, like yourselves, and then obviously the like underlying account capabilities. And so like, we onboarded obviously the companies, earlier, but there might often be like a significant lag between when we would see like nested customer activity. And when we started seeing just like the consistent growth, I mean, like I think it was the first nested customer payment. We were just like, yes, like, all right, that's it. Like this is the days. Like it wasn't the direct customer account opening. Like that part's like boring, like anyone can do that. Like it's this thing, it's like really cool. Um, where should we go next? So I hate the like, where do you want this to be in 5 years? Because I think it's like kind of a boring question, and you get asked it a lot by investors in particular. But like, I'm more interested in like, what does winning look like to you, right? So you talk about kind of like um, people thinking about you as like an Amex competitor. Like, what do you want the terminal state of Yonder to look like?
Yeah, I think I've always said that I want Yon to be the center of all your fun and adventure spent.
Hmm.
And so if you kind of think about buckets of money, or think about sort of your, I guess how people like use their money, investing, saving, that's like not where we want to play. Like there are
Yeah.
great products for that if you want to invest and save.
Yeah.
What we really care about is like, how do we take your like your flow of money and turn that into something really special? And,
I
and
love
whether
this.
that
This is
is,
so cool.
yeah, and whether that's like trying new things, going on a new adventure, um, creating memories with friends, creating memories with family. Like for me, like money itself has no value. Like it's what money allows you to do.
Yeah.
And how do we become part of that adventure that you have? Yonder
Yeah.
actually means, by the way, over there. And we had this idea
Yeah.
like people who are yonder, like exploring an adventure. In fact, this
Yeah.
morning I was in a customer interview with someone you wouldn't think is a typical, persona of a Yonder customer. He's late 50s, early 60s, based in Wales. So it wasn't a London tech
Yeah. Yeah. Not a
person
London hippie
in
or
Hackney.
hipster. Yeah.
Right? And he was next to me, he goes, I love going out to eat. I love
Mm.
traveling. So like I'm looking forward to going to a really nice steak place with my
Yeah.
two kids. And so I think, for me, it captures the type of customer who is like, hey, it doesn't matter how old you are or young you are. It's like someone who goes, I love to like try a new place. I love to
Yeah.
try a new thing. And so I think for us, we want to be at the center of that. But for customers all over the world, like I want to be across Europe. I think this core essence of like using money to unlock new memories isn't
Mm.
unique to London. It's not unique to like the UK. Right?
No.
Like
No.
it's
No.
not a unique
Yeah.
thing. It's for everyone in the world wants to experience that. And so how can we be at the center of helping you unlock new memories and experiences through your flow of money that goes to Yonder? That's sort of me what it looks like. And that's, in Europe, Middle East, Asia, US, wherever that is in the world. That's what the kind of core belief that we have.
I love that. All right. Last question. Um, let's say, for whatever reason, you decided to leave Yonder. And let's not assume it's for a bad reason. Let's assume Yonder's like an absolute explosive success, and somehow overnight your kind of vision is realized, and you're like, cool, I've achieved it. I'm ready for the next thing. What would you do after this?
Um, it'd probably be like one of three, and it all might be related. Either A, build another company again, but it'd be very different. It'd be completely different. Two, I really love supporting founders as well in the early stage. I think there's something pure about the early stage of company building. I love that sort of taking some of the lessons we learned as well. And so I'd love to support there, whether it's investing or angel investing, whatever that looks like. And then thirdly, I have like a really keen interest in international development, which is a very completely different sector. I
Yeah.
sit on the board of World Vision, which is a large UK charity, and my wife's family were refugees from Cambodia from the genocide.
Mm.
So we have like a keen interest in like supporting that as well. So it could look like that as doing all of it at the same time or sequentially or in different ways. I don't know. And to extent, I'm still doing a bit of that already, actually. Like obviously I'm building Yonder,
Yeah.
helping support some early stage founders and also doing some work on the side around like poverty alleviation as well. Um, but no, uh, for me, like Yonder is the company I want to build. There isn't like a do this flip, do the next one. this is the
Yeah.
one company that I really want to build. I'm really proud of it. It's exciting. I love traveling and seeing customers use our product and be like, I love this. That makes me so proud. And so it's kind of why I love consumer businesses, because I think it's one of the few products where someone who has no background in the industry is like, oh, wow, I love that. That's great. And that's quite unique to being a consumer business like ours.
Yeah. I mean, I think uh, getting to feel the sort of tangible impact that your product has on people's lives is unquestionably like the most rewarding thing about running a company. Um, like, yeah, I I love what you guys have built. It looks incredibly fun from the outside. Um, and we're, yeah, just super stoked about your success and getting to work with you and all of that stuff. Um, cool. And we're more or less at time. What are the shout outs, calls to action, things that listeners should do if they're not doing? Obviously, sign up for Yonder Card. But where can we find you? What should we do? Where should we listen to you? All of that stuff.
Yeah, so we're obviously at yonders.com and you should definitely sign up. Takes less than 2, 3 minutes to do, which is great. And go and like sign up and explore some of our partners. We're so excited to work with over 300 to 400 businesses now across the UK. I love championing the businesses that we work with. I love seeing them succeed with us. We had the fun challenge of not just building a consumer credit business and consumer product business and a consumer card business, but also actually started a loyalty rewards marketplace as well, which is really fun and challenging. But I love seeing our partners succeed with us, and we love seeing our customers go and be like, wow, I had such a great time. And I love our partners say, hey, some of your members came and had such a great time
Yeah,
as well.
yeah.
That's for me is like really exciting. We're obviously available on LinkedIn and Instagram as well. Instagram is much more fun than our LinkedIn. And, generally I'm pretty available. Like I kind of speak fairly frequently, like sifted events and things like that. So, always happy to sort of for people to come along and listen in as well.
Cool. Thank you again for giving us the time. It's been a pleasure.
Great. Likewise.